In today's rapidly evolving financial landscape, investors are constantly seeking ways to optimize their portfolios for both growth and stability. Traditional portfolios, often comprising stocks, bonds, and real estate, have been the norm for decades. However, the financial world has witnessed the emergence of a new asset class that is garnering significant attention: cryptocurrencies, with Bitcoin being at the forefront. This script explores how incorporating Bitcoin into a diversified investment portfolio can enhance overall returns and reduce risk. Understanding portfolio diversification. Portfolio diversification is a risk management strategy that mixes a wide variety of investments within a portfolio. The rationale behind this approach is that a diversified portfolio will, on average, yield higher returns and pose lower risk than any individual investment found within the portfolio. By spreading investments across various financial instruments, industries, and other categories, investors can minimize the impact of any single asset's poor performance on the overall portfolio. Bitcoin as an emerging asset class. Bitcoin, introduced in 2009, is the first decentralized digital currency. Over the years, it has matured into a recognized asset class with a significant market capitalization. Unlike traditional assets, Bitcoin operates on a decentralized network known as blockchain, which provides transparency and security. Its unique characteristics have led many investors to consider it as a potential addition to their portfolios. Enhancing returns with Bitcoin. One of the most compelling reasons to include Bitcoin in an investment portfolio is its historical performance. Despite its volatility, Bitcoin has delivered substantial returns over the past decade. For instance, in certain periods, Bitcoin's price has increased exponentially, outpacing traditional asset classes. By allocating a small percentage of a portfolio to Bitcoin, investors can potentially enhance their overall returns without taking on excessive risk. Risk reduction through low correlation. Bitcoin has exhibited a relatively low correlation with traditional asset classes like stocks and bonds. This means that its price movements are not closely tied to those of other assets. In a diversified portfolio, assets with low correlations can help reduce overall volatility. When one asset class experiences a downturn, another might rise, stabilizing the portfolio's value. Bitcoin's low correlation makes it an attractive option for diversifying risk. Volatility considerations. While Bitcoin offers potential benefits in terms of returns and diversification, it's essential to acknowledge its volatility. The value of Bitcoin can fluctuate dramatically in short periods due to various factors including regulatory news, technological changes, and market sentiment. Investors should carefully consider their risk tolerance and investment horizon when deciding on the appropriate allocation for Bitcoin in their portfolios. Strategic allocation. Determining the right allocation for Bitcoin in a diversified portfolio requires careful consideration of an investor's goals and risk appetite. Financial advisors often recommend starting with a small allocation, such as 1 to 5% of the total portfolio value. This allows investors to benefit from potential upside while limiting exposure to Bitcoin's inherent volatility. Incorporating Bitcoin into a diversified investment portfolio offers an innovative way to enhance returns and reduce risk through low correlation with traditional assets. While its volatility presents challenges, strategic allocation can help manage these risks effectively. As the financial landscape continues to evolve, investors who embrace new asset classes like Bitcoin may position themselves for long-term success in an increasingly digital world. As always, investors should conduct thorough research or consult with financial advisors before making any investment decisions. Understanding one's own financial situation and risk tolerance is crucial in building a portfolio that aligns with both current needs and future aspirations.